The hedge fund industry continues to recover from the drubbing it took in sort of the 2008-2009 time period. And as things are coming back and rebounding, some things are changing. So we're going to talk a little bit about that today. My name is Greg Crawford. I'm the editor of Tab Forum, joined by Gurvinder Singh, CEO of Indus Valley Partners Cosmos Technologies. Gurvinder, good to see you. Thanks for coming by.
Thank you. Thank you,
So,
Greg.
first of all, I wanted to ask you, obviously the big sort of thing on a lot of hedge fund managers' minds is registration, and that's coming down the pipe quickly. From your perspective, Gurvinder, can you tell us where that is and where firms are?
Sure. I think what we have seen, especially since last year and coming into this year, the number one thing that people are worried about right now is registration. Am I ready? I mean, so as I mentioned earlier as well, there's a lot of navel gazing happening at the fund manager level, who are really thinking and asking the questions: Are we ready? Will we survive an SEC audit? Are we ready for the AIFM directive that's going to happen in Europe? So there's a lot of fresh pressure, I would say, from top down, from the PMs and the fund managers on their COOs, CTOs to be ready.
Okay, so if there's the navel gazing going on, then that's got to change from that to some actual implementation and action, right? I mean, what's happening on that side of it?
I mean, we're absolutely seeing a lot of this translating into a lot of initiatives. I think, I would say between last year and this year, we've done a number of projects and works where our primary task really has been to document processes, to identify gaps, to basically, figure out what they need to do to be able to show that they have a transparent and a predictable operating platform. And what it means in terms of systems, what it means in terms of databases, things like that.
So people are moving in the right direction. It's just a process that they've got to go through and get on board with. Okay, excellent. So that's on the registration side of things. The other thing that you had mentioned was the way they're handling assets as they come in. As you mentioned, it used to be, they would get a mandate from a pension fund or a family office, whatever it may be, and it would go into the fund, and it would sort of be these commingled funds. But we're moving now more toward managed accounts, and that's something that you see as relatively new development. Can you tell us about that?
Yeah, I think clearly we've all been, at least on the tech world, we've all been waiting for managed accounts for I think 10 years, some would say. But I think what has happened is because of all the the beatings the investors took. So first reaction was I think they all retreated out of the market, or they just held the cash back. So I would say that was most of last year. This year, as the money is starting to come in, there is logically more comfort in a managed account model, and we're actually seeing it. And this is actually translating into a second pressure, which is really more on the operations, where the fund managers are going, hey, am I ready operationally to deal with 5, 10, 15, 20? Some fund managers are even saying, I need to be ready to deal with 50 managed accounts. And having, if you've dealt with a managed account, operationally, it's a huge pain. I mean, from not just operations perspective, even from a compliance. So now you suddenly enter what I would call a multi-PB, which everyone is, multi-custodian, multi-compliance type of a model, because each managed account may have its own set of IMA rules. And it changes the ball game completely. It's a much more traditional asset manager compliance model applied to a very complex book.
So I can see the complexity. I mean, if you just think about it, as you say, multi-PB, multi-custodian, multi-compliance, and you can just imagine the complexities there. I would think that firms kind of range in terms of how far they are, or are they not even to the point of understanding the complexity and moving toward resolving some of those issues and getting those systems in place, or are we still early in the game?
I think there's definitely I think there's a fair amount of understanding on what they need to do.
Okay.
But again, there's a difference in level of maturity of the fund manager and the management team on how far they spend upfront to be prepared for it.
Okay.
So it's a little bit of a catch-22 in that regard. But I think what has happened is with the registration requirements, being a trigger, which is going to happen. All the governments have basically said, guys, whether you like it or not, it's going to happen. So I think those two combined are really making them start to think it through more seriously and start spending. Now, I would say the larger funds, the more traditional multi-strategy hedge funds, who actually have a more flexible infrastructure architecture, are probably better prepared because they've run into some of these issues already. But unfortunately, there's, I think, a big chunk of funds, maybe even what I would call like first-time hedge fund managers, who think they can fight their way through with any kind of spreadsheet in any situation, which I don't think is true anymore.
Okay, very good. Well, we'll end it there. So some developments and some trends that we're starting to see emerge in the hedge fund space. Obviously, registration, you probably all know about that because that's been on the radar screen for some time, but also the emergence of managed accounts as a fund structure for hedge funds as investors are looking to invest again in hedge funds. So again, I'm joined by Gurvinder Singh, CEO of Indus Valley Partners Cosmos Technologies. Gurvinder, thanks for your time.
Thanks for
joining
me.
us.
Thank you.